Welcome to ETBFSI.com by the Economic Times. Today we are joined by Mr. Ashok Chandra, Managing Director and CEO, Punjab National Bank. Thank you, Mr. Chandra, for joining us in this conversation.
Thank you, madam. My pleasure.
Sir, congratulations. Today is the day you announce your Q2 FY26 results. It's been a steady quarter for you. The advances grew, the profits grew. My very first question to you would be, what were the growth drivers for Punjab National Bank? Going forward, what will drive growth in the second half? And what are your focus areas currently, sir?
Yeah, the main driving force was the retail, agri, and MSME. Retail has grown by 18.1%. Agriculture has grown by 13%, and the MSME, that is very, very important sector for the economy as a whole, that has grown by 18.6%. I think that gives a lot of cushion for the bank to show a good performance in the credit side. Even corporate loan book also in this particular quarter, QOQ, we have grown by 3%. And overall, YOY, it is 7.9%, which was very muted in the first quarter, but I am seeing the lot of tractions happening in this particular quarter. And if I can give the color about the corporate loan book, as of now, we have 1,78,000 crore of sanction book, not the pipeline. So this is the sanction which is already there. And I'm expecting that definitely going forward, this loan book will get disbursed. And further, there will be good growth in the corporate loan book also.
So now that you've spoken about corporate loan book, my another question on the same would be, where are you seeing the appetite? What are the sectors that are, asking for credit? And have you noticed a substantial change in corporates coming back to banks? Because for the longest time, bond market was a more attractive, venue for them to source credit. Are you seeing any change that is making you positive about it particularly?
See, I will give you one number that last year during the entire financial year, whatever the corporate loan book sanction was there, that we have done it in this 6 months time itself. So that gives the lot of cushion for and the comfort that yes, there is no dearth of proposals are there, and corporates are coming to the bank. It is not that they are only relying on the bond market and other instruments, and especially the project financing. In fact, PNB at one point of time was very active in the project financing. And we are coming back in that particular activity. And out of 1.78 trillion, which figure which I am giving you, 40% of that book is under the project financing. And when I'm talking about the project financing, it is all the sectors like renewable energy is there, then export oriented lot of sectors are there, then infrastructure also we are there, iron and steel industry also few proposals we have done, food processing we have some proposals. And overall, the corporate loan book, if I can talk about, we have some proposals under the smart metering, InvIT, REVIT. Then we have the EPC also. We are there, real estate, data center financing is one of the important. The key factor is there. I think all put together, I think I am seeing a good, at least. The proposals coming to the bank and sanctions are happening. Now I am waiting for the disbursements to happen. And if that the fast pace the disbursement start happening, I think definitely the corporate loan book also grow with more than 10%. And through your channel, definitely I will request all the corporates, they should come forward and avail those facilities.
Sure, sir. However, competitive pricing was another reason being flagged by a lot of lenders. Have we put that issue behind us now?
No, in the corporate sector, definitely the pricing is one of the biggest challenge. They are all looking for a very, very competitive price. And as a banker, we also see our cost of fund and what pricing we should consider. I think all those things we are also looking into that. And depending upon that only, we are also considering the proposal and we are giving the sanction.
Noted, sir. I'll talk about the share of book between RAM and corporate. Will it remain constant? 57% is RAM for PNB. what is the composition going to look like going ahead in FY26? And maybe if you can talk of longer period also, will this remain constant, change? What will increase? What will decrease? Please give us a color on that.
Our goal is to reach the RAM share to 60% and corporate loan book to 40%. And by end of March, definitely we will be reaching a figure of around 58 to 59%. And the corporate loan book to that extent will come down. But overall, the growth is we are likely to happen in the corporate loan book also. It is not that we are reducing the corporate loan book. Rather, the share composition, we are pricing it and rebuilding it.
Right, sir. Noted, sir. I also like to get some sense from you in terms of private capex. You're one of the largest public sector banks. If I talk about the ground reality, are you seeing meaningful pickup in private capex? Because we just spoke of corporate in detail.
It was the challenge in the first quarter, but going forward, I am seeing that yes, people are coming forward, and that is the reason the 24-25, the entire sanction book, which we have done it in the 6 months' time itself. And if I have 1.78 trillion sanction book in place, I think another 6 months to go means definitely I will have another 1.5 to 2 trillion proposals coming under this particular segment. I think that speaks a big number overall if you see the bank like ours doing the sanction in the corporate loan book.
Sure, sir. Noted. I'll go ahead and talk about margins in CASA. Margins have been under pressure for across the industry because of the rate cut, 100 BPS of rate cut. However, CRR cut has been into implementation and there are liquidity measures from RBI as well. For you, how are you protecting your margins? Because there's been a slight decline for PNB. The domestic NIM stands at 2.6% for this particular quarter. What will be your strategy ahead to protect margins given we might witness another rate cut or we might not? But to be on the safer side, what are your strategies? And I'll also add CASA into the discussion. That also declined slightly. So, what are your targets and strategy around this?
See, the domestic NIM has been declined and it is 2.72% now against 2.84 in the last quarter. And we were expecting, and we had told in the last conversation also, that Q1 and Q2, definitely, because Q2 is the one quarter where full 100% rate cut has been passed, because there was 50 basis point rate cut had happened in the middle of the Q1. So that entire impact was not visible in the Q1. Now those entire 100 basis point cut has been visible in the Q2 now.
Right.
But going forward, because now all my deposits, which was there for 400 days, a special deposit was there, then the 1 year deposit, I think all those deposits are getting repriced now. And going forward in the Q3, I'm expecting that at least 5 to 7 basis point improvement should happen in the NIM. And by March 26, another for Q4, I think 10 to 15 basis point improvement should happen in the NIM.
Noted, sir. And your commentary on CASA, sir. What is the strategy?
Yeah, CASA is a challenge which you are seeing across the banking industry. But if you see in our case, the QOQ growth is 2.6% and YOY it is 4.7%. CASA, in fact, we were knowing that challenges are going to come in the system. So on 12th of April this year, we had revamped our entire CASA product. So today we have the product for the salaried people, a special product for the non-salaried. Women, we have a special product. Youth, we have a special product. Kisan, we have come out with a special product for the farmers. Then we have a special product for the senior citizens, pensioners, the defense personnel, and all these segments we have given some add-on facilities. And result is that the almost 6 months, 5 months time, we have built up a 27 lakh plus SB account in this revamped scheme. And the total deposit has gone up by 18,000 crore in this SB individual. And that is the reason, despite the institutional deposits coming down in the CASA, we are still able to show some growth in the CASA front.
Sure, sir. Noted. Now it come to the October policy. couple of regulatory developments that came up apart from the MPC, the regular guidelines that come. One being expected credit loss draft guidelines, another being mergers and acquisition financing. How are you positioned in terms of M&A financing, being a bank as large as PNB? First, on M&A financing. Another on ECL. How do you envision ECL for PNB? And do you have a ballpark figure on the buffer you'll have to keep aside, given it becomes for the glide path over the next 4 years that has been mentioned by RBI?
First, I will touch about the M&A. I think this is a bold initiative, very good initiative by RBI. And since the policy was not there, so bank was also not having any policy for funding to this particular sector. Definitely, we are coming out with the risk mitigation measures and the matrix and the full policy. We are going to frame it now. And definitely, the PNB is one of the largest banks in the country. And any growth story that has to happen in the country, definitely PNB has to play a very, very big role. So in this particular segment, when RBI has enabled us to go for this, I think PNB will play a very, very important role in this. Now, coming to the ECL, we have done some reworking and calculations and stage 1, stage 2 and stage 3. See, stage 1, absolutely there is no challenge because 0.4% has been recommended, and as of now also in the standard asset we are providing 0.4%. Challenge is not in the stage 3 also because bank has 97% PCR. So absolutely I don't see much challenge in the stage 3. Stage 2, there is a elevated provisions are there and 5% is required to be done, except home loans and loan against property wage 1.5% is there. Otherwise, all the sectors, it is 5%. There, if we, as of now, the asset which we have and the model of calculation, the PD, the calculation which we do, around the 85 basis point, the CRAR impact will be there. Around 80 basis point impact will be there. And if I factor it for 5 years, then it comes to around 15 to 16 basis point every year. And we have enough room to take care of that because the profit of the bank itself is this year will be around 15 to 16,000 crore. I think going forward, I don't see much challenge in meeting that requirement.
Noted. So I'd also like to talk about the Insolvency and Bankruptcy Code Amendment Bill that came previously. While you have been part of the COC for a lot of those cases that have gone through resolution, as a lender, how do you see IBC Amendment Bill 2025? What is your overall comment? What will be your overall comment on that?
One act which has been very, very dynamic and which takes care of the requirement in the financial system, that is the IBC. Since the inception in 2016, we are seeing that it meets the requirement of the financial sector. It understands the voice of the financial system. It measures those things, and then goes for the formulation of the separate policy for that. So a lot of fine things have happened in the IBC space. There were some challenges like admission of the case. There was a delay was there, resolution plan. So for all those things, a lot of improvements have happened, and definitely going forward, we will see efficiency happening in the IBC process.
Noted, sir. One quick question on the NPA resolution targets for PNB in FY26. What is it? How far you've come? How much has been recovered, and how much is left to be done?
See, we have given the guidance of 16,000 crore in this financial year. And in this quarter also, we have done a recovery of 3,920 crore. Last quarter, it was 3,356 crore. Going forward, definitely our recovery will be more than 4,500 crore. And the guidance 16,000 crore which we have given, I think definitely we are going to meet those guidance.
Sure, sir. To wrap up this conversation, I cannot leave artificial intelligence. Going through investor presentation, I see a couple of initiatives, including the chatbot.
Yeah.
For you, how big are you betting on AI? And there's been a chatter about, will AI replace jobs? For PNB, do you think AI will cause layoffs? First, that. And If you can also talk about the technology investments that have gone up or down, maybe with the adoption of AI for this financial year or over a longer period. Like, I want to understand how much is AI increasing the cost for you, and how big is PNB betting on AI?
Because of AI, there will not be any layoff in the bank because it is rather supplementing the manpower now. It is rather the bringing the efficiency in the system. It is bringing the efficiency for customer handling now, and we have the use cases like Gen AI chatbot. Pihu is there. You can go to our site and you can do the chatting with Pihu. It will provide you all the answers related with the PNB, whether the schemes, guidelines, what are the documents required. You can chat and he will provide you everything there. For employees also, Gen AI based, we have the Rahi chatbot, where the employees can also do the chatbot sitting across the counter. It can chat with the Rahi and it can provide all the solutions to the customers now. Then we have also come out with the training model where the conversational metaverse we are using the augmented reality and virtual reality, AR and VR. We have developed the interaction with our employee, and that employee interaction happens for half an hour in all my training center, and that entire etiquette, communication, body language, that gets monitored, and the full report comes to the employee now. So these are all for the use cases which we are doing it. But going forward, we are also going to use it in our the fraud risk management. Even we are also going for the robotic process automation now. So bank is using it and very mindfully where it is required, where it can improve the efficiency of the employee and efficiency of the customers in the customer service. I think these are the few areas bank is looking forward for implementing the AI and genetic AI.
Sir, on the tech investment part, has it increased the cost for you?
In fact, we have budgeted, and this year 3,500 crore allocation has happened for the capital and the revenue expenditure in the IT and digital.
Sir, I take this as the last question, and I speak to you from the perspective of the banking sector as a whole. First, GST relief to the consumers, then income tax, and so much that the government and the regulator has been doing to boost consumption. What is your sense of it from the macroeconomic perspective? And given the backdrop, what is the biggest challenge that you outline for the banking industry to tackle?
I will put you in this entire thing in the four stages. The government of India, what they have done, and how the RBI has also brought in the improvement. First, the income tax, which you have mentioned, income tax rationalization, tax rationalization, and the simplification which has happened. With all those things, the everybody in the country who were paying the income tax or who were supposed to go to the income tax bracket, I think there the saving has happened, and with that, the purchasing power capacity of the person would have improved. Now, disposable income has improved of the individual now. That is first stage. Second stage is the repo rate cut, which has happened. 100 basis point cut in the two stages have happened. With that, interest rate has come down. So once you have the disposable income, and once the interest rate cut has happened, I think people will be induced to go for taking the loan now. So what was required? Third stage was that CRR cut 100 basis point has happened.
Right.
Now with that, 15,000 crore of liquidity in our bank is happening from the September quarter to December quarter.
Right.
Fourth stage was the GST rate rationalization now.
Yes.
And simplification of this entire GST rate process and reduction in the rate now. Almost all essential items, rate has been made zero. All
Right.
medical equipments and the medical purchases, medicines, it is zero now. So what has happened? And the vehicle, the itself, the GST rate cut has happened. In the vehicle itself, the components, their rate cut has happened. Like tires rate cut has happened. So all those things will reduce the price of the vehicle. Cement rate cut has happened. So that too also 10% from 28% to 18%. It is a very substantial amount. To that extent, at least the cost of the house will come down. Dwelling unit will come down. So income tax rate concession and simplification, the repo rate cut, the liquidity through the CRR cut, and the GST simplification. All these things are going to, one is that improve the purchasing power of the customer,
Right.
disposable income of the customer, and interest rates are low. Banks have the enough fund. Liquidity is not the issue today. So all those things put together in the short run and in the long run, it is going to improve the credit delivery and it is going to increase the credit in the retail, agri, and MSME sector. There is absolutely no doubt about it.
Sure, sir. And the challenge for banking sector with the backdrop?
Challenge
So,
for banking sector.
yes. So, what is the biggest challenge that you outline going
See,
forward?
if I can talk about the in a bigger sense and broader sense, so cyber security is one of the challenges, and the every bank has to have the very robust cyber security framework. Operational resilience is required, and you should have a very strong SOC and knock management system in the bank. And PNB is well poised, and we have a very strong system. I think through channel, I can give confidence to all my customers and those who want to bank with PNB. I think definitely they can do the safe banking with us.
Thank you so much, sir. With this, we close the conversation. Thank you so
Thank
much
you.
for patiently engaging with all the questions. Thank you so much for
Thank you,
watching.
madam.